The emotional trap most beginners fall into. Why beginners lose emotionally. Have you ever wondered why so many people quit trading within their first year? It's not because they lack intelligence. It's not because they don't have enough indicators. It's not because they don't know what a support or resistance level is. The real reason is something far more dangerous. They lose the battle inside their own minds before they ever learn to beat the market. Most beginners think trading is about predicting where price will go next. But professional traders know something different. Trading is less about predicting the market and more about controlling yourself. The market doesn't care how badly you want to make money. It doesn't care that you lost yesterday. It doesn't care that your bills are due next week. Price simply moves according to buyers and sellers. Yet every day, thousands of beginners sit in front of their screens carrying fear, hope, greed, excitement, frustration, and desperation into every single trade. Without realizing it, they aren't trading the market anymore. They're trading their emotions. And that's where the real trap begins. Imagine this. You discover Forex trading through social media. You see someone making thousands of dollars from a single trade. Luxury cars, expensive watches, profits flashing across the screen. You tell yourself, if they can do it, so can I. You open your first trading account filled with excitement. You expect success to come quickly. Maybe your first trade wins. You feel unstoppable. Your confidence shoots through the roof. You begin thinking you've figured out the market. Then, the next trade loses. You don't panic yet. You tell yourself the next one will recover everything. It loses too. Now frustration begins to creep in. You increase your lot size. You force another setup, another loss. Now you're no longer making logical decisions. You're making emotional ones. And just like that, you've entered the emotional trap that catches almost every beginner. Here's the painful truth. The market doesn't destroy beginners. Their emotions do. Fear makes them close winning trades too early. Greed makes them hold losing trades too long. Hope convinces them the market will reverse. Ego stops them from accepting they're wrong. Impatience forces them into trades that were never there. These emotions slowly drain trading accounts, not because the strategy doesn't work, but because the trader can't follow it consistently. Think about this. If you gave the exact same profitable strategy to 100 different people, not all 100 would become profitable. Why? Because the strategy isn't the biggest difference. The trader is. Some people will follow the rules. Others will change them after one loss. Some will risk 1%. Others will risk 20% because they're impatient. Some will wait for confirmation. Others will jump into every candle that moves. The market rewards discipline, not excitement. One of the biggest misconceptions beginners have is believing more trades equal more money. In reality, more trades often mean more mistakes. Professional traders are incredibly patient. They can sit for hours doing absolutely nothing. Beginners can't. Silence makes them uncomfortable. They feel like they must always be in a trade. So they create opportunities that never existed. Eventually, those unnecessary trades become unnecessary losses. Then comes another dangerous emotion: comparison. You open Instagram. Someone made $5,000 today. You open Facebook. Someone flipped a small account into a fortune. You open YouTube. Another trader claims they never lose. Without realizing it, you begin comparing your chapter 1 to someone else's highlight reel. You start forcing bigger profits, ignoring your plan, increasing your risk, all because you don't want to feel left behind. Comparison silently destroys patience, and once patience disappears, discipline usually follows. Another emotional trap beginners rarely notice is attachment to money. Every trade suddenly feels personal. Instead of seeing risk, they see rent. They see school fees. They see family responsibilities. They see dreams that haven't come true. The pressure becomes enormous. Every small movement against the trade feels like an attack. Every candle creates anxiety. Every pullback feels like disaster. The trader stops thinking objectively. Now they're emotionally attached to every dollar on the screen. Ironically, the more desperately someone needs money from trading, the harder it usually becomes to trade well, because desperation clouds judgment. The market rewards clear thinking, not emotional thinking. Here's something many beginners never hear. Professional traders lose too. The difference is, they don't let a losing trade become an emotional event. To them, a loss is simply another business expense. Just like a restaurant buys ingredients, a trader pays for losing trades. It's part of the business. But beginners often see every loss as personal failure. They question themselves. They question their strategy. Sometimes they even question whether they're meant to trade at all. That's exactly what emotions want, to convince you that temporary setbacks define your future. They don't. The journey from beginner to profitable trader isn't about finding the perfect strategy. It's about becoming the kind of person who can execute a strategy with discipline, even after losses, even after wins, even after weeks of uncertainty. Because consistency isn't built on emotions. It's built on habits. And habits are built through repetition, not motivation. As this video continues, you'll discover the hidden psychological traps that quietly destroy most beginners, the dopamine addiction behind winning trades, why revenge trading feels impossible to resist, why fear keeps you from taking the best setups, and how professional traders develop emotional control that allows them to survive long enough to become consistently profitable. Because mastering the charts is important, but mastering yourself, that's what changes everything. Part 2. The dopamine cycle of winning and losing. Have you ever noticed that sometimes the best feeling in trading doesn't come from making money? It comes from clicking the buy or sell button. That rush, that excitement, that anticipation. Your heart beats a little faster. Your eyes stay glued to every candle. Your mind begins imagining all the things you'll do if this trade wins. At that moment, something powerful is happening inside your brain. Your brain is releasing a chemical called dopamine. Most people think dopamine is the pleasure chemical. Not exactly. Dopamine is the anticipation chemical. It fuels expectation. It tells your brain something exciting might happen. Pay attention. This is why trading can become so addictive. Every trade carries uncertainty. Every candle creates suspense. Every profit sparks excitement. And every loss creates an emotional crash. The brain starts chasing that emotional roller coaster. Before long, you're no longer trading because there's a high-quality setup. You're trading because your brain wants another dopamine hit. That's one of the most dangerous traps in trading. Think about a slot machine in a casino. Most people don't keep pulling the lever because they always win. They keep pulling because they might win. That uncertainty keeps them coming back. Trading can work the same way. One winning trade gives your brain a powerful emotional reward. Suddenly you feel brilliant. You think you've mastered the market. Confidence quickly turns into overconfidence. Then you begin increasing your lot size. You stop waiting for confirmation. You start entering trades simply because you expect another win. But the market doesn't reward confidence. It rewards discipline. Then comes the losing trade. The excitement disappears almost instantly. Your emotions shift from confidence to frustration. You tell yourself, I'll make it back on the next trade. So you enter again. Another loss. Now your brain isn't chasing profit anymore. It's chasing relief. You want the emotional pain to stop. You believe one winning trade will erase the frustration. This is how revenge trading begins. Not because you're greedy, but because your brain desperately wants emotional relief. The cycle becomes predictable. You win. You feel unstoppable. You increase your risk. You lose. You panic. You chase another trade. You lose again. Now fear takes over. Instead of following your trading plan, you're reacting emotionally to every outcome. The market becomes a battlefield inside your own mind. Many beginners believe they're addicted to making money. In reality, they're often addicted to the emotional highs and lows, the excitement before entering, the suspense while holding, the celebration after winning, the frustration after losing. Without realizing it, trading has become entertainment instead of business. Professional traders don't seek excitement. In fact, many describe profitable trading as boring. Why? Because they don't need emotional highs to feel successful. They've learned that consistency is usually quiet. No celebration after every win. No panic after every loss. Just another trade executed according to the plan. Imagine a pilot flying an airplane. Would you want the pilot making emotional decisions because of turbulence? Of course not. You'd want someone calm, someone who follows procedures, someone who trusts training over emotion. Trading requires that same mindset. The calmer you become, the better your decisions usually are. Another effect of dopamine is that it makes recent experiences feel more important than they really are. Win 3 trades in a row, and you may believe you can't lose. Lose 3 trades in a row, and you may believe your strategy no longer works. Neither conclusion is necessarily true. The market doesn't care about your last 3 trades. It only responds to supply and demand. Professional traders understand that every trade is independent. Yesterday's result has no control over today's opportunity. That's why they don't become emotionally attached to winning streaks or losing streaks. They simply continue following their edge. One habit that separates professionals from beginners is what they do after closing a trade. Beginners often jump straight into another setup. Professionals pause. They review. They breathe. They ask simple questions. Did I follow my rules? Was my entry valid? Did I manage risk correctly? If the answer is yes, the outcome doesn't matter. A losing trade executed correctly is still a good trade. A winning trade taken recklessly is still a bad trade. This mindset protects professionals from dopamine-driven decisions, because success isn't measured by one trade. It's measured by hundreds of disciplined trades over time. If you constantly need excitement to enjoy trading, you're setting yourself up for emotional exhaustion. The market is not designed to entertain you. It's designed to test your patience. Every impulsive trade, every oversized position, every revenge entry, every emotional decision comes with a price. Sometimes that price is money. Sometimes it's confidence. Sometimes it's months of hard work erased in a single afternoon. The goal is not to eliminate emotions. That's impossible. The goal is to recognize them without allowing them to make decisions for you. When you stop chasing emotional highs, you start making logical choices. When you stop trying to feel like a winner, you begin acting like a professional. And that's when everything starts to change. In the next chapter, we'll uncover 3 of the most destructive emotional behaviors in trading: FOMO, revenge trading, and overtrading. These 3 habits have emptied more trading accounts than almost any bad strategy ever has. If you can master them, you'll already be ahead of most traders who enter the market. Subscribe for part 2 of the emotional series. See you on our next series.